Welcome to the AccendoTraders video trade plan for Thursday, April 28th, 2008. AccendoTraders.com. Effective trade plans delivered daily. So, you guys know this is our routine for our new traders. Go ahead and pause the video right here. And this is what we do each night to set up our trade plan, to set up our pre-market routine and after-market routines for the next day, to know what we should be doing and what stocks we should be in and out of. And also we want to have a life. So today in the market, it was a weird day. It was a really weird day. You can see crude inventories showed a build. We had a lot of earnings. We really have a lot of earnings going on right now. But you can see 7 of the 10 major sectors in the positive territory, even though it was a positive day. And you can see our numbers aren't really blowing away. I mean, the Dow's only up 42. That's a P 500 only up 3. It just at 12 o'clock the market just sold off. I'm not sure what really caused that. Maybe it was anticipation of Apple's earning, whatever. But the market sold off about 12 o'clock, and rally, it kind of went sideways. So we'll see what the reactions to Apple and Amazon's earnings tonight will do for us tomorrow. You can see some more about some of the earnings that I was reported today in the upgrades and downgrades. Tomorrow, we've got some economic data. We got durable orders, jobless claims, and new home sales. Look at the list for earnings tomorrow. And this is not all of them. These are the ones that caught my eye. And then we also have several after the bell. But we got POT tomorrow. Got PCU tomorrow. Those are the first two that really grabbed my eyes for some of the trades that we like to be in. And then we still have our two split plays that we're watching. So let's go ahead and take a look at our flag list from last night. Okay. So here's our flag list from last night. You can see we had a small list, and again, the what I want to point out about the market is that we did, here's the NASDAQ up, still kind of died at the wicks. You can see these wicks up here, tweezer tops that are acting as immediate resistance, although we're talking about up here, but you can see not able to break this 24.15 range. Here on the Dow, still holding on to support of this downtrend line, sideways move. So, again, this could be considered as testing. And here's the S&P, still modified, rising 3 plan, and could be considered as testing. But again, what I want to show you is what I said during the opening, is that today it just didn't feel right, And you can see that right here, the market's okay. Here we go, and and I really haven't been able to find any news that triggered this, 1 hour sell-off. So it just could have been, profit taking. It could have been, a lot of different things, but. Again, and look at the wick. Look where we exhaled. We're still not getting above this resistance level. So we need to be cautiously bullish, but again, be concerned about the fact that we are not moving higher. Here's our AEM play, and you can see that we talked about breaking the 50. We broke the 50 and came all the way down. If you're not in, you definitely should not be getting into the stock tomorrow. That's a very aggressive play. We do look like we have some support around $63. But I'm going to unflag it because of that great gap down that we were looking for. AIG also gave us our entry that we were looking for. Continuing to move down. You can see we got an initial target of about $43. So I'm going to hold on to unflag it for right now because of how close we are. Let's see what happens. APA failed for us, so I'm a little concerned, but this one deserves one last day, because obviously if it goes down tomorrow, then this is all violated. But I'll give APA one more day just out of respect of the move. ATI did give us a gap down and immediate move up. This was an earnings. And I never play over earnings, so I missed the fact that ATI had earnings. Unflagging that. BHI gave us a nice entry today, broke into the resistance. We got some more resistance coming up, so I'm also going to unflag here. And I may bring some of these stocks back, but for right now, I'm going to be real cautious because of the market is going back into that, I'm not sure mode. CLF, we'll give it another day because of the great move. ESRX, big move, so I'm going to unflag it. Still waiting for MGM to break the support, about $49. Here is RIG. And I'm going to give it one more day. But oil pulled back, so maybe oil will finally go. Sears, we talked about below the wick is our safe entry, so we didn't get that. So I'm going to leave it. WFT concerns me. You can see we really pushed down on strong volume. So I'm going to unflag there. WLT, still have a wedge play, so we're going to keep it. And XOM, I'm also going to unflag and just keep RIG as the oil play. Okay, and now we're ready to head on to our educational portion of our video, and we're talking about the shift to mineral analysis from the book Trading in Zone by Mark Douglas. And yesterday we talked about the paradox of traders having to face uncertainty, having to face the fact that we really don't know if the market's going up or down from day to day, and yet in the face of that uncertainty, being able to stay focused and disciplined on your routine, on your trade plan, on being you, be who you are, be who we are as traders, and not place blame or get frustrated, or more importantly, not have the market be a place of fear, let the market be a place of pain. Again, you've heard me say it over and over again. It is what it is. The market is just data, and we place that information. We place opinions. We place meaning to that data based upon our background experience. And if your background experience is pain, then you're going to place pain on the data that the market is giving you. But when you are able to confront that fear and confront that data and say, you know what, it is what it is. This is my system. This is who I am. And whatever happens, that's when you've learned that the most important skill of being objective and neutral. Whatever the market does, I've gotten some emails about, you're switching positions. Sometimes you're bullish and sometimes you're bearish on a stock from day to day. Well, you know what? Depending on what market is, our job is to interpret the data and give our opinions and to say this is what I think is going to happen, and so I'm going to let my system do what it does. There's not a trader amongst us who hasn't gone through all kinds of emotions and gone through the metamorphosis of becoming hopefully an enlightened trader. Who has not been in a trade and said, you know what, even though it's reached my exit, this one's a winner. I like the company. I like the CEO. I saw it on Jim Cramer, booyah to death, and I'm going to let it go. And that loss became a big loss. I mean, again, and we've said this before, and I'll say it again, capital management is if psychology trading is 90% of the work, capital management is 5% of the work. Those two things together really equate to the majority of how you become successful. When you can think properly about the market and you can manage your money properly, then that last 5% of technical analysis is just now natural, and it's allowed to. It's 5 o'clock to enact, and it's allowed to do what the system is supposed to do because you're just allowing the system to be what it is. So it's important that that we don't convince ourselves to stay in the trades. It's important that we don't get too nervous and cut our profits too soon. It's important that we develop a system through sometimes pain, through experience, whatever word you want to use, develop a system and become a trader and become a consistent trader. And so that when you're able to look at the market, when it comes down to blame about a trade going against you, you're not blaming the market. You're not even blaming yourself. You're just saying, it is what it is. I may need to adjust my system, but I'm ready to move forward tomorrow in the market with the same positive attitude that I can be successful. So to read more about our trade plans and more about the psychology of trading, we've got my blog down at the bottom, blog at michaelglass.com. And then we've got our link there to get the podcast. Remember, the podcast has the full version, has every section. And as always, I love your feedback. I'm making the adjustments as you guys read into me. Although YouTube, it's hard for me to go slower because I only have 10 minutes. And as always, trade at your own risk. I will talk to you guys tomorrow.